and welcome to this fresh edition of Big Deal. I'm NISHA PODDAR, and let's take it straight to a lot of action that is really taking place on the deal street. In fact, 3 large acquisitions got announced in this particular week itself. Let's first tell you the top headlines.
Intas Pips Aurobindo Pharma acquires global giant Teva's European assets for over $760 million in an all-cash deal. Canadian pension fund CDPQ will acquire a 20% stake in Edelweiss's asset reconstruction company. Under the agreement, CDPQ will make target investments of 5,000 crore rupees over 4 years. Orient Cement will buy 2 cement assets from JP Group. Will acquire 74% stake in Bhilai JP Cement from JP Associates and will also buy JP's grinding unit for 500 crore rupees.
All right, and what is one of the largest outbound deals in recent times that India has seen? Ahmedabad-based Intas Pharma, which is a closely held company, buys Teva's European assets for $764 million in an all-cash deal. Intas Pharma offered higher than its larger peer, Aurobindo Pharma, which was close to about $600 million. Let's take it straight to the deal maker of the week on Big Deal, MD Binish Chudkar, joining us straight from London. Mr. Chudkar, so good to have you on the show. And what is it that this particular company really, or these assets, bring to the table for Intas Pharma that you landed up paying a hefty £600 million?
Yes, there are a lot of synergies with our present operation and this asset. This asset is one of the best performing assets today in generic space in UK. We have a huge R&D base out of India. We do have our marketing in Europe. Both combined, it's going to be a lot of value creation in days to come. And as you are aware that top 2-3 companies do make larger penetration in the market, and they usually have better margin on their products which they are selling. So that's the very purpose of this acquisition.
So as you said that you will be amongst the top 20 generics players globally. With this acquisition, you'll be the largest in the UK, one of the largest. But Mr. Chudkar, while most of the Indian pharma companies are headed to the US market to gain more market share there, what is it that you really see in the European markets that you have headed there? Because a lot of investors are not very keen on the European markets at this point because the margins are really low over there.
I agree with your statement, but just to give a brief about what Accord Intas is doing in Europe, we are a company which started a little early in Europe. We started US a little late. We do have a 300 million turnover in US, and we have around 250 million turnover in Europe. See, you have more peak and valley in US business because it gives you jump, and then the business and margins also go away that fast as soon as the competition comes. It's very efficient market. On the other side, European market, you have a better stability. So we need to have a balance. Here the asset which is on the table is one of the very few assets usually which comes on the acquisition side, and that has motivated us to take a part. So it's not like we like Europe or we like US, but this is a perfect match for Accord Intas. That's why we have picked it up. We are evaluating more opportunities in US and Europe at the moment, apart from this.
So more acquisitions, which are the areas that you're looking at for more acquisitions? Any specific requirement you have at this point?
See, if you look by business, our Accord Intas business is divided into 3 parts. Is oral solid tablet capsules. The present which we have acquired fits well in that. Second pillar is hospital business, oncology, where we are going very strong, and with that we have got a global footprint. We are marketing in 22 European market, US, Canada, Australia, with that side of the market. And third is our differentiated patented products, in which we have got biosimilars. So these are the different activities on which we are on product outfit on which we are working. So we'll be looking for assets which are specific to this area, which fits well with our present working.
So, Mr. Chudkar, you do sound extremely acquisitive in nature at this point. How much more are you going to set aside for more acquisitions? Because you just made a large acquisition. You'll wait to digest that large buyout, or are you ready with your kitty? And how much are you really setting aside for future acquisitions as well?
See, I would like to answer a little other way. See, today the interest rates are very low. We can easily raise the funds. We have private equity on the board. If there is something large comes in, we can dilute, and we always have their consent letter backing us. They are endorsing our strategy. So funding part, if there is a good asset on the table, funding is not an issue at all. And we have been performing at 20-25% annual growth for last 5 years. So even this present debt of around maybe little less than $1 billion, we are likely to pay back in 4-year time. Again, my balance sheet would be almost debt-free. We are paying tax, and the assets which we are buying is also generating enough margin, and they have high tax liability. So I don't think debt is a worry to us. Yes, the size is equal to our outflow is the creation of the debt is high, but the margins are also high. We are not buying an asset which is distressed or there is a lot of efforts to be done to revive it. Rather, it is a best performing asset and is going to help our present European operation with the management which is driving this business. You understand that this company is generating profit out of European manufacturing. So there is some strength inside the company. They know what they are doing exactly, and their strategies are very good. So we are going to benefit out of it. I don't say that Indian manufacturing is going to be bad, or in long run Indian manufacturing is going to back this acquisition to sustain the profitability in the long run. But overall it's going to benefit because service level needs to be very high when we work in Europe, being a fragmented different countries, different levels. So overall this fits well with our present strategy, and creation of debt is not an issue on the table.
Yes, a large presence overseas you have. In fact, a larger share of the revenues really generated by Indus Pharma are from the overseas market than India, even though you are an India-based company. But at this point, I'm going to ask you synergies as well as business sense aside, but how about integration as well as absorption of this new company? How easy or difficult is it going to be at this point for Indus Pharma to absorb what you bought?
We are likely to have a very smooth integration in the sense that this business is very complementary to what we are doing. And I would like to say that rather we are keeping the ball ready today itself. Means after this interview, maybe we'll have one long round of planning for integration of the organization. And this is very UK specific asset. So integration is very smooth because we have 50 million, they have got 250 million pound of UK business. So I don't see integration is an issue right now. The rest of the Europe would get support of this management. And we do have one additional manufacturing plant in north of UK, which we acquired from the assets were bought recently back, and it is going into production, means commercialization somewhere in January. It's a separate set of products. So all these things are likely to further fuel the growth for this joint activities.
Yes, you raised a very important point, Mr. Chudkar, that you have the backing of a marquee private equity firm. Temasek owns a 10% stake in the company, and you can dilute more if you want, so you have deeper pockets when it comes to more fulfilling the ambitions and meeting your ambitions when it comes to more acquisitions as well. So is that one of the big reasons why you could bid a higher amount, higher than your other larger peer, Aurobindo Pharma, and it was substantially higher because Aurobindo, as we do gather, stopped short around $600 million, while you have crossed about $750 million in your bid?
I don't know what they quoted, and I would not like to comment whether we quoted higher or lower. There might be 10-15 players eyeing this asset. I'll be able to comment on what I have to do. what I personally feel that when there is a private equity, you need a much tighter discipline, because they are paying money, they are investing in the company, but they have a very tight investment plan, and they would like to see the results in 4 to 5 years horizon. So if you are very sure, and if you are sure of your performance, then you will enjoy working with private equity. So I don't say that that due to private equity we are bidding higher, or it's other way around. We are more confident on our strategy, so we have a larger option. Apart from private equity, we can have a debt also, or say Temasek has entered recently 1.5 years back or 1 year back. So for their exit, we have got 4 or 5 years. So we have option to go public anytime during that. My answer is that our balance sheet is enough strong. See, either you create debt or you dilute. End of the day, final answer is whether what way you are going to perform, and what are your near-term strategy, and how your strategies are likely to fulfill the subject business sense. So we are confident what we are.
All right, Mr. Chudkar, at this point, hold your thought there. We'll slip into a short breather. So come back for more chat with the promoter of Intas Pharma, the firm which has made this large outbound acquisition just recently and is gearing up for more. So coming back with more insights coming in from Intas Pharma. Stay tuned to Big Deal.